Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some ratios. I've got and some non-ratios: platinum, silver, gold. I'm a huge platinum bull. I mean, I'm massively a platinum bull. When looking at a lot of these charts, you have to be. I mean, that's what it comes down to. It's on some of the charts they're about to break. On others, they have broken. So we'll go over that. I've got some rare earth metals that I also am a bull on. I do own some in the rare earth metals. I'm going to show you some charts on the rare earths. I own REMX because the majority of the rare earths come from China. REMX has a lot of Chinese investments, and I think they're going to make a lot of money. They're going to be printing money because we just don't have rare earths really mining or being mined from the majority of anything outside of China. So I think they have a stranglehold on the entire renewable electric vehicle mix. And if there's a problem with rare earth metals, they're probably going to keep them and sell them to their Chinese companies and maybe or maybe not sell them out. I don't know. We'll see. But I'm willing to take that risk in an ETF type fashion. And I'll go through the charts here. We'll dive in. And again, this is just my financial opinion. Please don't use this as advice. Use it to maybe develop your own strategies. And I was looking through the comments section, reading some, and some people were like, "Well, what do we rotate after uranium? What do we rotate into? Copper?" And guys, if I am so, what I'm my viewpoint is, I'm riding this thing all the way through the entire bull market. If you're trying to time all this stuff, it's not going to work. So let me repeat that: it's not going to work. Ride the whole thing up. Have a strategy. What is your strategy? Write down your strategy. Write it down. I'm not joking. Say, I want to buy X amount of oil, Y amount of uranium, and put it all the way down. Now, what should those things be? It's going to be different for every person. If you don't like a lot of volatility, I would go with the diversified mining companies, and I would load up in those. Why? Because they're basically mini commodity companies that are diversified. That's what they are, or major companies, however you want to say it. But they're little commodity bull markets within themselves, and then they pay these massive dividends. Massive dividends. We're talking over 10% on a lot of them. So that's something that's really hard for me to not get into. Are companies that pay dividends over 10%. Now, we've got royalty companies, and royalty companies have a leg up on the rest of the competition. They have no input costs. Well, they have very little, I'll call it variable input costs. They don't have costs from fuel and all these other increased input costs. So they get this nice clean revenue that increases when the price of the commodity increases and increases when the volume increases or expands. And a lot of them, if you buy something in a development stage type company or project, and you have a royalty on that development project, they're going to grow that over time, and the production profile will go up over time as they start producing from it and produce more from it over time. So I think that is an incredible area to get some investments in is royalty companies. And when I look at these things, I don't look at, am I going to trade in from one commodity to another? The timing's too difficult to do that. What I look at is, where are things down? Where are they down, and where can I pile in for the entire duration of the bull market? I'm holding on to gold and silver, platinum, copper, the energy companies, and I'm not trading in and out. There are very few times or areas that I'll put something into a free ride, take that money and put it into something else when the opportunity arises. And most of the time, it is based off of having very little to no exposure of that thing I want more exposure to. I'm fitting and moving money very rarely to gain exposure to areas in the strategy that I don't have exposure to. And I might have been waiting for the right chart pattern or technical analysis pattern to align for me to buy into it. And in the meantime, maybe there's something that was taken off, and I was just going to ride it higher. And I've done that very few times. So if you're asking, and you guys are trying to time yourself, and it's less than a year, that is the wrong move. It is such a wrong move. Because what's going to happen is you're going to be in a very, very good, well-valued sector, and it's going to throw a false signal to you, and it's going to take off and go. And people lose interest very quickly, and that's not the right strategy. It's not the right mindset to be in. The mindset should be 5, 10 plus years out. And if you're thinking with a 5, 10 year plus horizon, and you see something that's down and it stays down for a while, you may be accumulating for 6 months or 3 months. I was accumulating Nova royalty the past few months, and I was just piling in. I was like, $2.20, $2.25, $2.20. I was just picking it off and nailing it as I was watching the copper price develop a pattern and the nickel price develop a pattern. So I'm loading up. I'm looking at this like 5, 10 years out, this thing's going to absolutely kill it. Now, everyone else is wondering, well, they don't have any cash flow in the near term, but they're buying all their projects for cheap. That's when you have to buy it, is in the development stage, and they can all grow over time. All of that value is stuck in the ground right now. They're not mining it out. If they're not mining it out and the copper price doubles, all the value is still there, and they have royalties on it. If they're mining it out, you're sucking the value out of the ground and realizing that value. And if it's at lower prices today, you're realizing those at lower prices. In fact, what they're doing is absolutely genius. Because what they're doing is they're saying this huge project's coming. We get a royalty on it, 0.5%, 1%, 1.5%, 2% of net smelter value, whatever it is, and it's going to produce in 3, 4, 5 years from now. Well, I can tell you this, copper in 2, 3 years is probably going to be massively higher than where it is today. And they've got the royalty on it that they bought at what people think are prices of today or before that. So if copper was $3 a pound, some while back when they accumulated this stuff, and it goes to $20 a pound, the value in the ground isn't lost. And if they're not mining it, it's all still there. And if they're doing projects in stages, they'll mine it in one spot where the volume goes up, and these guys are going to make a buttload of money. And then they're going to grow it and grow it and grow it in terms of volume. And guess what? If the price continues to go up and the production goes up, they're going to be printing money. I mean, it's a joke. If you have no patience here, you're not going to make the money. I'm incredibly patient. So if this thing comes down, I'm buying again. It doesn't faze me if my account goes down a little bit. And if I mistime some things, I don't care. I'm buying it, I'm holding it, and I can see the value. It's in the ground on those projects. Your counterparty risk are all major diversified mining companies. If copper were to go to the moon, guess what? They're going to go to the moon because these projects are going to go through if the price goes way up. And there was another thing that Alex said. He's the CEO of Nova Royalty. And he's talking about these big diversified mining companies going after smaller and smaller projects. It means that they're struggling to find copper projects that are large in this world. I think that we're going to get in a crunch of copper, and we can't get out of it if we want to do this renewable electric vehicle mix. I don't think the copper exists at the flow rates to get this all done. I think oil is going to go shooting to the moon. I really do. Because we didn't invest in oil, and we're going to have constraints in copper and maybe even silver. Silver has 20 years of reserves left at current prices. I mean, obviously the reserves go up when the prices go up, but all that stuff has to be developed. It's not fast. We're getting to harder and harder to get at stuff. And guess what? If we go after the harder to get stuff, and you look at the amount of energy it takes on the declining ore grades of silver and copper especially, the energy input soars. So if that is the case, a royalty company would be by far the best play if it pans out, or the physical metals. And I'm not saying to go buy physical copper, but physical platinum, physical silver, physical gold. I mean, I know a lot of people, there was someone in the comment section commenting about catalytic converters. We have hydrogen that's coming, and platinum's used in fuel cells for hydrogen. They're going to blow that up because mining for batteries is too mineral intensive on a large scale for these big, we'll call it big semi-trucks, airplanes. You have to have the energy density be very dense and very light in comparison to, say, a battery. So if we're going to continue to fly airplanes, if we're going to continue to have semi-trucks and all these other things to move things around, I'm willing to bet that we're going into a hydrogen economy. It's not because hydrogen is better, cheaper, or whatever. It's because you can store a lot of energy in hydrogen. It's the most simplest way to do it if you want to go that route. And platinum right now is one of the metals that we use to do hydrogen fuel cells. And I'm betting on platinum because, one, it's cheap from the Dieselgate from Volkswagen that brought it all down. And now we can load up. I mean, it's the cheapest metal. I'm going to show you in these charts what that looks like. But the grave mistake that everyone's going to make and miss out on what I would consider this to be the biggest opportunity of anyone's life, this big rotation of money and where commodities are valued in ratios. I'll show you some ratios here. The biggest mistake is trying to time and trade and move around. It's the biggest mistake. Just trust me. Do not do it. Develop a strategy. Develop a plan. Get your portfolio allocation right, 5% or less if you're going into these highly speculative companies. You can go more if you want in a diversified mining company. These guys are well capitalized. They're printing money. They're paying it out in dividends. Over 10%. Some are even close to 20%. That's VALE, RIO, BHP, SOUHY. There's a couple there. NILSY, Norilsk Nickel. Those are the companies I'm talking about. Look at royalties. Royalties they're going to print money, baby. They're going to make so much money, it's going to be unbelievable. And I know you're going to be paying a little bit of a premium. You can buy some mining companies if you think that they're going to develop a project and just absolutely rip it. But keep in mind, there's not many of those. In the copper area, it's the big diversified mining companies and the big companies that are going to make these projects roll and make a lot of money. It's not going to be the small guys. The small guys, they can find some stuff, get maybe a teeny bit of money in it, but I wouldn't overweight them. We're talking about risk-adjusted returns. Risk-adjusted returns means how much risk are you taking to get that return? If it's a low risk with a huge payout, it's basically a no-win bet. Take it. Take the no-win bets. Pick up the 600% or 800% return that you can get in some of these diversified mining companies or in a physical precious metal like platinum or silver. It's going to come, or gold. Gold's in a really good spot. You're probably going to see a big move. And I know it's out of favor, and that's exactly when you have to buy this stuff, is when it's out of favor. When people don't like it, you got to be in it. That's the way I view it. So let's dive into the charts, let you know what I think. So we've got platinum to gold ratio right here in the upper left. We draw the downtrend line. This is we're zoomed in here, guys. We're zoomed in. Draw the downtrend. We just broke this downtrend. Yes, it could pull back. Yes, it could go all over the place down here before stair-stepping higher. I'm not saying that it's just going to go straight up. Nothing goes straight up. You got to be patient. But I do think that the ratio has bottomed and we're starting to move on up. You can tell that we bottomed in November of 2020. We had the 50-day cross move over. Yes, it's going to cycle back and forth, but I do think we're putting in a long-term bottom. Looking at the platinum to silver ratio, this one has not bottomed yet, and it may not bottom. It may move around and stay stable at this ratio because silver is also undervalued. But I do think in the beginning of the bull market, beginning to middle, that platinum will outperform silver. So I do think this is going to go up. It peaked last time at the end of the bull market, of the commodity bull market, and then the last 3 years, silver took off. So if you want to play the swapping ratio game, and you know this, what I would probably do, and what I have been doing, is buying more platinum. Probably going to ride this ratio higher, where it peaks at the housing starts rate, not ratio, the housing starts. The housing starts fall down and we lose our expansionary phase. We're probably going to have a crash. And that's where I'm going to load up I would sell out and then load up into silver in the 2008 peak of 130 and then ride this guy down like no other. And then swap it back when it gets to the bottom somewhere close in here and swap it back to platinum or some other metal. Depends on what the metal is cheap too. We've got the platinum to palladium ratio. This thing looks like it's trying to put in a bottoming pattern to move on up, potentially. This is the platinum to palladium ratio. I see platinum firming up. Palladium's probably going to head lower. I've got the palladium chart down below here that we'll look at. But I think this is going to break to the upside and move vastly higher, probably over like 3. And we're at 0.5. That's going to be a great move over time. And then here's silver price. You can see the lows are all they're stepping and getting higher. This one's a fluke from COVID. I would discount this because of that panic sell-off. But you can see it bounced back very good with a lot of buying pressure. And the selling pressure isn't immense on the weekly candlestick chart. Could we still go lower? Yeah, we could. We could. But we would still be putting in a higher low. It would still be a buy on a long-term perspective. And if you're cost averaging in and you're taking the big long-term viewpoint, then yeah, it's perfect. And I bought down here, I bought in here, I bought in here, I bought all through this area in here. And I was loading up. Now you couldn't really get this price down here because the premiums shot up, but I was getting it for like $16, $17. And then we've got platinum here. This is just the price chart of platinum. We've got this channel going across. We broke out of the channel to the upside, back testing the top of the channel, and we're going to be rolling on up, which we've seen here recently. And let's hopefully that momentum continues. But platinum on this chart looks good on a long-term perspective. We've got palladium here. Palladium looks the opposite, and I've always said this on the channel. Palladium goes opposite of the other metals, and I don't have all the reasons why, but here it is, basically peaking out, and we broke to the downside. Now I want to see if this thing continues lower. It might. I swapped my palladium for platinum at the bottom here at about 0.35, just above it, right in here. Because I said I think this is going to be the bottom. We had another opportunity here recently to swap out, and I think we're going to break to the upside. Guys, this takes time. You have to be patient. But I think the trends are in place, and this could probably go lower. Push that ratio much, much higher. Now I've got this copper to gold ratio. This is a long-term ratio here for this copper to gold ratio. You draw the pattern in. We broke to the upside of this from 1971, this downtrend line of the ratio of copper to gold, and copper could outperform gold for the next however many years. It could even be 20 or 30 years. So copper, I think, is a spot that you got to look at. And I think it's a really good investment for a long-term play, especially if we're going to try to go to renewables and electric vehicles. We're going to create the largest copper shortage we've ever seen. Copper is going to go vastly, vastly higher. And the way I'm playing it is Nova Royalty. I know VRF and a bunch of diversified mining companies that have a lot of copper, like Southern Copper is one of them. Now, looking at the rare earth metals, here's the pattern that we came up. We came up, created a pattern, broke it to the upside, pulled back, and now we're still moving on higher. This looks really good for a continued move to the upside. Looking at some of the smaller companies, I own Appia, a good amount in Appia. Coming on up, created the pattern here. We're still in the pattern, but it looks like we've got good buying pressure coming up where we're probably going to try to break to the upside of this, or maybe we have one last down move and move on up. So the accumulation here, if you find the company down in the 50 to 55 cent range, I've been accumulating it myself. And I just accumulated back here in September. Looking at MP Materials, again, we still haven't broken the downtrend, so we've got some time here, but we're making higher lows as we step up into it. And then we've got palladium, and palladium looks like it's topped. Looks like it's coming on down. Large sell-off, small up days in here. Another sell-off, small up days all through here. Sell-off. It's basically selling off, and it can't gain traction to move higher. So maybe this is topping, maybe not. But that's one that I probably would be avoiding over time. So that's what I have for the update for the ratios. And again, this is a big picture view. It's a strategy. It's investing in the big trends, and I'm holding on and riding it higher. There's no point of going in and out and timing this stuff on a month-to-month basis. If we have a pullback, I ride through it and I buy more at the bottom of the pullback, and I just keep riding it higher. I'm not trading in and out. I made that mistake last time. Not doing it this time. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.